Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your assets. Don't forget to subscribe and like these videos. Yesterday's activity in the markets reflected this continuing exuberance as the traders come piling back into the markets. Meanwhile, nothing's changed. We're still dealing with the coronavirus. We're all remaining in our safe places and trying to avoid other human beings, which in itself is an interesting concept. As I discussed in last night's video, I talked about the unintended consequences of us ending up in a socialist environment just by all the bailouts. Once again, the administration is talking about taking equity positions in the airlines and other industries, just like they did in Chrysler back in the day. Well, that worked out good with Chrysler. This is also what I discussed last night, that we're going to be spending decades getting the government out of businesses. The unfortunate decisions that have been made, shutting down the economy, will have long-lasting effects. By no means the fact that we've rallied off the lows of this market means that this decline is over and that the economic calamity that's yet to happen is over. Over the next several weeks and months, we're going to find out really what we're dealing with. At the moment, no one knows what we're dealing with. This thing is just unfolding. April 1st is coming up in 2 days, and if you're a landlord, you're wondering if you're going to get paid at all. I heard a story today from a property owner, and he got a letter from the tenants saying they're not going to be paying their rent and explaining to him why. Every one of the tenants signed it. He had to go back and explain, you're still responsible. If you have a problem, they're glad to work with you. But this is the kind of mentality that this is setting up in the economy, where people think they can just pass go, collect $200, don't worry about anything else. This is going to be catastrophic as we go through the next 30 days. And if it gets extended even further, I have no idea what the implications are going to be to the economy. But these type of things, when the government tells you that you no longer have your responsibilities, shut down society at levels that we've never seen before. Meanwhile, back in the markets, we're seeing all this exuberance. My expectations are that we will start to see some consolidation of the sharp rally that we saw from last week's low. The next several days are likely to be challenging, although there are some really substantially positive things that continue to happen. Number one, the volume in the market has dropped back to 6.4 billion, which is good. I'd like to see it closer to 4 billion, and that would tell you that the markets are starting to normalize. Also, we're seeing a contraction of the ranges, which tells us the liquidity is starting to come back. So those are the good things from the market standpoint. Meanwhile, algorithms and other market players will drive this market up and down. I'll go through the details here in the technical section to give you a little better vision of what I think is going to happen over the next several days.
Looking at the S&P 500, you'll see that the futures are down slightly overnight. My expectation is that we're going to see some backfilling as the 21-period moving average is coming into play, which is currently down 0.8 on the ppm2. This suggests that there is only a 20% probability for the market to close above this level today. The cash market looks a little different because it has not had reflection of the overnight trading, but you can also see that while the ppms are accelerating to the upside, they're still at substantial downward pressure, which suggests that the probabilities are that we will see some kind of backfilling. One of the things that I talked about last week was moving back to fill the gap down at the 2300 level. I don't think that's possible, primarily because of the 10-period moving average at the 2460 level will be major support. My expectations for the next several days is a move between 2640 on the upside and 2460 on the downside. I mentioned in the opening comments that we're seeing some contraction of the daily ranges. There's still about 110 points on the 3-day volatility indicator. I would like to see that get down closer to around 60, maybe even 40. You can think about what I just said. We're so used to these 150 and 200 point ranges on the S&P over the past several weeks that they've become somewhat normal. A lot of this has to do with the elements that I talked about in opening comments, that the volatility is being driven by the lack of liquidity, and the lack of liquidity has been evident in the spreads between the bid ask. All of those things are tightening up. We're seeing normalization. They're actually seeing the futures liquidity about double during the trading day, which was very encouraging. And even at double, they're still probably 70% off of where they were 6-7 weeks ago. So there's a lot to go in stabilizing the market. And I believe the pattern that I talked about last night, if I'm not going to go through the details tonight, so watch Monday's video if you want to see the breakdown of the expectations of the pattern over the next several weeks. But for now, we should see some backfilling toward the levels I just mentioned, and then the markets will most likely stabilize and then make one more move higher. Still expect to see somewhere between the 2780 level and the potential is going high as 2930. This will complete the commentary for tonight. Thank you for watching. We'll talk to you tomorrow night.